Welcome to Trade Pro. I've got a special video for the Bitcoin investors and swing traders that watch my channel. This one has been highly requested, so I'm going to cover my Bitcoin top targets, when the top is likely going to happen, and how you can maximize your profits in this bull market by using a strategy instead of going at it blindly. If you appreciate the video and want to support me, please use my Bybit link when you sign up for an account. Bybit is the best crypto exchange for trading because you can get paid to take limit orders, which makes it so much easier to be consistently profitable in the long run. The link is in the description if interested. Now let's get into the video. Now the first thing I want to cover here is what stage Bitcoin is at in the bull cycle by simply comparing the action we are seeing now to the previous cycles without any indicators needed. So first, we're going to go back and look at 2013, then 2017, and then we'll look at today. So I'm just going to get rid of these indicators for now, and we're going to talk about those in a bit. But for now, we're just going to take a look back, specifically July 2013. So right here, this pullback. Then we're going to look at July 2017 on this pullback. And then we're going to look at July today, this pullback. So what do these all have in common? They all mark mid-bull cycle pullbacks before the final parabolic leg to the peak. Now, next, let's look at the tops. In 2013, the peak occurred at the beginning of December 2017, the same timing, and today we are closing in on December fast. So let's look at this. We have December, and then December over here. So we're closing in on December, and it seems like it's almost here. It's only a month away now. Is the top really going to be at the beginning of December? Well, we're going to need to take a look at a few other things to determine when the likely top is going to happen. These things are cool to point out for determining, a potential time frame, but how can we get a potential price target? Well, let's take a look at a few indicators and also a measure from previous cycles. We're going to start with a measure of how much price moved after breaking to a new all-time high after those mid-cycle July pullbacks. So let's go to 2013, where we saw over 300% from the break of the all-time high after the July pullback. So right here is the peak before the July pullback. And when we broke it, we go right around 300%, just over 300% till the peak. Now let's take a look at the 2017 run. And in this case, we have over 500%, around 560,000 or 560%, my bad. Now, let's take a look today and see let's say 300%, where would that take us? Well, that would leave us right around $260,000 Bitcoin. So this is cool so far, but it's not really enough to go based on, in my opinion. So we're going to need to take a look at a few indicators to better give us an accurate, well-rounded approach to this. So I'm going to start with this 2-year moving average multiplier. So let's pop that up on the chart here. So this right here has accurately pointed out the tops and the bottoms of these Bitcoin cycles in the past. We see that the past cycles, they always peak over the upper red band, which would put us for this cycle at a minimum of 130,000 Bitcoin. So you can see right up here, that would put us right around 130, much less than the 260 target given by taking those measurements. So what I suggest here is to use these different metrics as places to take profits, lock in profits, and each one is going to give you a different indication because you can't rely all on one thing to do everything. All right. And all these other previous cycles peaked over the red. So just hitting the red at 130, you can probably expect a little more upside after touching that red line. So something that we're going to take a look at next is a stock to flow multiple indicator. I'll pop that up here. And something very interesting occurs with this each cycle. So let me pull up a drawing tool here. So far we're repeating the same pattern. So I want you to take a look, noticing at the start of each cycle, it begins with the indicator chopping around the midline of this indicator here, followed by a large drop off. And then we get that final big run up to the top. So you can see, beginning of cycle, we get a big drop off, normally a small correction in the market here. And then we get our final run all the way up to the top of the cycle. And then we can compare that to 2017, where we get this chop around the center line, the beginning of this run. Then we get this huge drop off into the red here, followed by that final push to the top. Now, what have we seen so far in this cycle? We've seen this chop. We've seen the huge drop off. And now we're just getting up to that point where we're at the center here, meaning there should be some more room to run up here. But how can we get kind of a more accurate target of where this thing should end up and where we might want to take some profits? Well, we can use a trend line. It seems like this indicator is making lower highs. So if we put a trend line in, leads us right around here. So what you can do is, again, take some profit once you see that this indicator has reached the downward sloping trend line. So that's pretty much it for this indicator. Another way that you can really get a good point of taking some profit and being cautious that the top may be getting near. You know, we're never going to be perfect. You're never going to nail it exactly spot on, but it's better to be safe than sorry. So you want to lock some profits in. So now let's finally look at the RSI. I'm just going to get rid of these other indicators and all these drawings here. Let's bring the RSI up. So let's determine when's a good time to take some profit if we're using the RSI. This one's really simple. If we look at the previous cycles, they peak over 90. So we can take a look here. This one just reaches 90, 90, and they kind of get these double peaks. So you get these twin peaks above 90. So what I'd be looking for is for the RSI to come up to the 90 range. Once it starts closing in on that 90 range, it's a good time to look for taking profits. And that's it for the RSI. Very, very simple. So, you know, it's important to have this kind of combination of different indicators and methods for what the potential top is going to be with this cycle. That way you aren't just blindly going at it and kind of guessing what's going to happen. So, you know, in conclusion, I recommend taking a multi-stage scale-out approach when you're taking your profits, because the chances of nailing the exact top are pretty much slim to none. You know, that's it for this video, but hopefully you enjoyed. Be sure to like and comment for the YouTube algorithm if you liked the video, and thank you so much for watching. Hopefully you learned something.